Good morning, good afternoon, good evening, all over the world. Dobson 777A here. All right, before I start the report, I thought we ought to remember on this day, 18 years ago, 246 people went to sleep in preparation for their morning flights. 2,606 people went to sleep in preparation for work in the morning. 343 firefighters went to sleep in preparation for their morning shift. 60 police officers went to sleep in preparation for morning patrol. 8 parametrics went to sleep in preparation for the morning shift. None of them saw past 10 a.m. In one single moment, life may never be the same. As you live and enjoy the breaths you take today and tonight before you go to sleep in preparation for your life tomorrow, kiss the ones you love, snuggle a little tighter, and never take 1 second of your life for granted. Now, a couple days ago, I did a report and I was showing that it looks like we have a pennant formation and it looks like we may be about ready to break out. It could be another week or two, but it looks like we're getting near the point where I've seen this happen in the past. And I gave you some projections where it looked like gold was going to hit around 2,200 and silver was going to go in excess of $35. Now, silver just doesn't typically always materialize, so I'm not guaranteeing that, but the gold has been consistently doing this. So I wanted to remind you guys, this is a short-term prediction, but the longer-term prediction still holds. And I want to show you some of the historical data that I like to pull up, once about every quarter because I get new folks all the time and they forget that I've been doing this a long time. And I'm not a guy out here pushing for subscriptions or memberships or anything because I'm just doing this as a little bit of a hobby. But I do have memberships that provide more details. And this report's going to contain all of the details, but I will hide some of the details for only the subscribers. But the members get to see more details. But look at this. I've shown this chart before. I believe that we are going through a currency reset. And they're using, this COVID as kind of the thing to mask what's really happening. And in 1970 to 1980, gold went up 15.2 times, and silver went up 17.07 times. Now, if we took the starting point of gold of, let's say, 1,200, that would mean by the end of 2029, we would be at $20,000. If we took silver as a starting point of roughly $14, we would be at $240. Now, these are just rough numbers. Things can change dramatically. This thing can get completely out of control and we could turn to Venezuela. I doubt it, though. Reserve currency countries have kind of like advantage here versus these third world countries or emerging markets. They get decimated during these times. So that's another way you could potentially play this is in other currencies. But I wanted you to be aware this is the long-term goal, and using the miners for leverage, you could be looking at tremendously higher returns in comparison. So that's why I play both. I do like 75% physicals, 25% miners is kind of the way I play the game. And then I also do 80% gold, 20% silver, and it's just because I want to remind this here. Silver is the orange color, and you can see that silver, once it gets up to its peak, it completely collapses. And you get a second peak, but it's way below, where gold has a second peak that's virtually identical to the first one. So you have time. If you miss the first one on gold, you'll get a second shot. You do not get a second shot on silver. So you have to sell into this parabolic rise on silver to have a chance. Otherwise, you just really don't get any return at all. That's to speak of. So keep that in mind. This is another reason why I say 80% gold, 20% silver. Some of these clowns come on here, you just don't know, I don't know. The silver guys, they don't like to look at historical data. And I'm trying to show you, I'm trying to protect your principal. The number one rule in investing is don't lose money. So I'm trying to show you the game we play. We'll be selling, even in gold, you can see the biggest gains are in the last year and a half or so, where all of the goofballs get into this, and we're going to be selling our overpriced asset to these goofballs that are buying late and let them get stuck with the overpriced stuff, and we'll be moving into blue chip dividend stocks or something. So, or real estate or anything. That's what I keep doing. I rotate out of overpriced and I rotate into undervalued. That's what we want to do here. This is, I'll probably still hold some gold, but the idea is to go move it into something else and play the game another 10 years. You just let the wave come in. We're trying to, it's almost like surfing. You got to get out there. A wave is coming and you're going to be early where you get it cheap down here, and that wave comes and it just rides you in, okay? That's what we're doing here. I want to show you, because everybody's just looking at, every day, every week, every month. I look over a longer period of time. Since I did my rotation into physicals and minors, this is the reward that I've gotten. So SPY since like September 2018 has only gone up 17% minus dividends. Okay, it's a little bit more than this. This chart doesn't factor in dividends. TLT, which is a bond thing, has even done better than SPY. It's almost, in fact, it has doubled SPY. So if you want to play a super safe play, TLT's done very well. But gold is like 64%, which is doubling TLT. And then silver is at 82%, but you can see it's done this major jump. We don't know if this is going to reset down, because that's kind of what happens with silver. Whenever it passes gold, it tends to come way back down again. So I wouldn't get too excited. But GDX now is 122%, so that's 2 times gold. And this is the large gold miners. And then, of course, you have juniors and others. But I'm trying to keep this chart simple. Over a fairly short period of time, we are destroying the SPY because I did a rotation, and I begged you to do the same. So let me show you why I did what I did. All right, so right here is the SPY using my infamous pitchfork chart. And I was looking at in 2018, I could see that all of a sudden, we'd shot up and then we broke down and we were on the bottom of the pitchfork chart. And then all of a sudden by the end of 2018, we broke completely out of the channel and had collapsed. So this was a telling point, and a lot of people saw this, a lot of people, and they rotated into gold right at this point. In fact, here's my gold chart, and you can see this same point right here. This is the same point where all of a sudden gold started taking off, and then and I'm looking at this 50-week moving average here. You notice how it was running right here, and then all of a sudden it started coming off the line. So this is another entry point where a whole bunch of people got into gold. But this change here, where it just completely bent this line and started running up here, this was in May of 2018, or 2019, I'm sorry, that another whole bunch of purchases in gold occurred. And even your 200-week moving average bent right here. So keep in mind, gold has been the play here, not the S&P 500. The smart money got the heck out of the S&P and moved in. Sorry about that. The smart money got out of the S&P and started moving into the physical metals. Now I wanted to show you, this is my portfolio where it's combined of the physicals and metals. And you can see if I had stayed in the S&P 500, I would have been sitting right here, which is, that's probably at that 17%, but you can see I'm at a 50% return. So I'm destroying this by just rotating. I'm not trading. I'm not day trading here. This is an investment. I invested. I rotated out of one thing into another. And it has it's even less volatile. I mean, look how much less volatile this is than the S&P. Do you see how far this dropped versus this? And that's the difference of having, 75% physicals and 25% minors. And again, in both cases, I'm doing like 70% gold, 10% platinum, and 20% silver. And this gives me a very nice, predictable return. You want to remember that the dollar is declining fairly rapidly. So since 1913, when it used to be worth $1, I mean, it's down to pennies now is all the dollar is worth. So this is one of the reasons why we're making sure that we have these physical metals to protect what we are saving in. But there's also a time and place to be, converting the majority of your wealth and trying to preserve, and not only that, get ahead. And so the timing, using timing charts like I show with these pitchforks, is instrumental so that your money's just not languishing. Lastly, this is my favorite pyramid chart. I want to remind you that I have always kind of use this. It's just this top part might be something different occasionally. But the foundation of my chart is a business, and I have rental real estate. And I have a large percentage of my portfolio invested in this, and that constantly is earning money that allows me to go buy physicals and miners and whatever and live. Dividend stocks is another big thing that you can do. But I'm hoping that I can take this play, and by 2029, I'll have a whole bunch that I'll rotate into dividend stocks and possibly another business or in rental real estate. But these dividend stocks, I have a feeling by 2029, they're going to be terribly undervalued, and my miners and everything else are going to be terribly overvalued, and I'm just going to do a rotation. I'm going to rotate it back in here until I see what the next opportunity. But right now, this is where I'm loaded up. So I have a huge foundation of 80%, which includes, physical metals, and then we start moving into more speculative things. So I have my silver, royalty companies, large miners. I have 15%, and then I have another 5% that's in junior miners and micro miners, which can give you a phenomenal return here. But I only buy a little bit of that because a little dab will do you. This is like putting a spicy mustard on there on the top. You don't need a lot, just a little bit. A lot of people get carried away and they're building their foundation with this stuff. Well, you may have a much higher risk tolerance, but my whole idea is to smartly grow money. So that's what I do. All right, so today we have the gold is up 0.11%, silver's up 0.3%, platinum's up 0.87%. And when we look at the chart, so right now we're kind of inching up here. And when I look at the chart for gold, it's kind of like every day it's following a similar pattern where it kind of peaks up about this time and levels off. But it's not really doing any of the breakout yet that I'm expecting at any time. So we'll just have to keep watching. Gold and silver kind of doing the same thing. The gold-silver ratio is sitting at 72.3. Now the markets are kind of just a little, I don't know, 0.5% to nearly 1% for the Dow Jones. Eurozone, they're like the 0.33, France 0.37, United Kingdom's 0.77, China's like 0.76, Hong Kong 0.71. Not a whole lot going on here. All right, so gold is, for our ETF, is up 0.33 today, and it's, let me slide it over. So 28% for the year. Platinum's 1.22. It's trying to get back even again. It's down 3% for the year. Silver's 0.84 and up 50% for the year. Our ETF miner portfolio is, it's kind of even right now. It's up 39% for the year. Silver is, junior miners are negative, as well as large gold miners are negative for the day. We look at our improved portfolio. It's up 42% for the year and essentially even for the day. My portfolio is down 0.28, but I'm up 51%. But remember, I'd rotated into this in August last year, so this is a accumulation of all these things. But I've got several positions. There's 119%, 109%, 72%, 85%. There's quite a few positions here that are doing just fantastic. Oh, here we go. So that was 85, 77.8, 83.1, 90.29. I mean, tremendous returns all throughout this portfolio. So I'm very happy with this in a year. In fact, I was doing a calculation here. So I'm up $48,000 of almost $100,000 investment. That's $190 per working day that this portfolio is currently doing without doing a thing. I don't do day trading. This is just, I bought a large percentage of the positions in August last year, and then the beginning of this year, I put a few more micro miners and royalty companies and everything in here to spice this up. And this portfolio is fantastic. I do have another portfolio that I'm going to add in here, and it's a really cool, I had talked about this several months ago, and I'm going to go ahead and add it in here for the members. I think it'll be a great thing for you guys, but basically it's playing 5 different uncorrelated assets. So it's like the Eurozone, and you could play both positive and negative ETFs. It's the U.S. dollar, it's oil, it's a couple other things. But I think you might get a kick out of that one because that has the potential to do very well. And I'm going to use trade stop signals for that. So that'll be another report that will be available for you guys. And some of you might like that, where it's actually a little more trading, but not a lot. You might trade a position once a month, but sometimes it gets a little more lively based on the trade stop signals. But I've done some work on that, and I found that actually could be a very lucrative way of trading, especially some of you guys that are stuck in your 401ks and IRAs that you can't buy maybe the minor stocks. This is another approach that you can use. So let me know if you're interested in that. I probably can get that loaded during the next week, and I'll start reporting on that for the members. All right, so I think that's it for today. I hope everybody's treating you well. I hope you're doing well. Do the best you can. God bless.